Welcome to the daily update, where I'll go over the action in the market for Wednesday, August 28th. Then we'll see how things look for Thursday, August 29th. Had a down day. The market's been a bit vulnerable lately. We're still looking at an extreme positive condition, especially in the short term, but it has not switched everything over to negative. But we want to keep an eye on things to see, is weakness starting to come into the market? We're still well below average with volume. So if some big player comes in and does some selling, or a few of them together, that can really drive prices lower. We saw the mega caps and the semiconductors underperform on Wednesday. Nvidia did come out with their earnings after the close, and they weren't really well accepted. It was down a little over 2% on the day. It's down almost about 7% after hours. That's dragging the futures down. We'll see if that flows through into the session on Thursday. I do have a thing called the SPXInvesting Program. I want to welcome all new members, and I'm really enjoying the idea of getting to know some folks and being able to talk about the markets. There's a link below this video that will take you to the website. There's also videos available that you can watch to learn about the program, but you can also contact me directly with this email address. One of the benefits that you get from being a member, and it's free for right now, and will probably be free until October, is that you get access to all of the videos right when they are uploaded. And they're designed that way to be the most beneficial. For example, the daily video, it's best to watch it before that particular day, or at least during that day, because part of the philosophy that I have is that we only get into positions at the close. So that's a little bit different than what other people do, but I found over the decades of doing this, that's what works. Also, the daily video is the real foundation of the analysis that I do. All of the other videos around the outside, I just do once a week. And there are also additional supplemental videos that I do from time to time that are on the website that I don't put on YouTube or Rumble. All right, let's go back and talk about what happened and then look at the charts. We did have a lower open, and prices right off the bat found support at the daily pivot at 56.17. So at least to start off with, even with the lower open, we were still above 5,600, but then we dropped down below S1, which was at 56.02. And then we did drop below 5,600. We found some other support at the 55.90 level. Then we just kept going down. We got below S2 at 55.79, didn't get close to S3. That's quite a ways away. And then we found the low for the day at the 55.60 to 70 level, kind of bounced around there for a while. We got back above R2. We tried to get up to R1, which was now acting as resistance, S1, but we ended up closing below S1. We were down 0.6% on below average volume. And not a surprise, we have the Labor Day weekend coming up here, and volume has been below average pretty much ever since we've been climbing up from the lows or the decline that we saw at the beginning of August. We're still positive in the short, intermediate, and long term, but still looking vulnerable. We're still looking at some extreme positive readings right now in the short term and somewhat in the intermediate term, but our list is shortening up just a little bit. And we'll have to see, how does the market react to the jobless claims and the second reading of GDP, which may be a non-event if it comes in pretty close to what we saw the first time. And then we're going to have core PCE coming out on Friday, and then all the different geopolitical things that we just want to be aware of these things because sometimes they can have an impact on the market. To go through some comments, the mega caps and semis, they had a pretty good day on Tuesday. Well, not so good on Wednesday. And we're still keeping an eye on one of the indicators that I follow called the mass index. It triggered while we were going up. And now that we're seeing a little bit of weakness here, is that actually signaling that we may have a reversal? Now, I'll go through and show you the chart later. Sometimes this ends up being a valid signal, sometimes it does not. Our short-term list, a little bit shorter. We're still kind of extreme with the 20-period exponential moving average. The slope oscillator, we're still looking good from a momentum aspect, and with the slope oscillator leading things and quite extreme right now. The Stoch RSI fell off the list, but the Williams percent are, and the stochastics are still on the list. And even though we've declined slightly, we're still looking extreme with our 20-period moving average study. Still have a list here, but it's shortening up a bit with the TTM squeeze, the PMO studies, and then the 10-day moving average of the new highs, new lows for the S&P 500. And we're still looking extreme with the 200 and 150 simple moving averages. So we'll have to see. Longer term, we're holding together. Intermediate term, still looking a little bit extreme, looking a little more vulnerable in the short term, unless we can see some real buying coming in. I haven't changed the scenario here, that it's pretty much looking like the Fed is going to cut rates at their next meeting in September. That's 100% probability according to the markets, but nothing is absolute until it actually happens. The dollar was up and interest rates were up, not up too much. We closed at 3.84% with the 10-year yield, up from 3.83%. And the day before that, we were at 3.82%. So yeah, interest rates are going up, but not drastically currently. We're still inverted with the yield curves. We ticked down with the down day with sentiment. We closed at 52. We're still in that neutral area. We're slightly positive because we're above 50, but we have been ticking down where we had been at 53. And we're still positive with the trend. And this is getting a little bit concerning. The green line and the red line are getting kind of close together. We're in danger of seeing a cross. In the short term, we're actually not trending now, but the ADX continues to decline in the intermediate term. And it's about at 21 right now. So we could enter into a non-trending situation, but we're still trending for right now. And I should have changed this. The bias is negative with the down day. The momentum still continues to be positive, though. And then the economic reports, we only had the one that we get every week. The weekly MBA mortgage applications were up 0.5%. Last week, they were down 10.1%. And here's a chart just showing how they kind of dart all over the place. And we see pretty drastic readings from week to week here. Some Isabel Net blog charts. These are real retail sales. This takes inflation into account. Just showing, and I show this quite often in the weekly video or whenever we see a chart like this, where we're kind of drifting sideways here. And the concern about that is that retail sales, they may not fall off a cliff, even unless we really get into difficult times. But sometimes this sideways action can often precede a recession. This is one of the things we're watching, but there's also a lot of other charts, and the market is anticipating also that we're not going to go into a recession, but that could change at some point. And then a 20% pre-election year, never lower election year. So that just means that typically during a presidential election, and this year's, of course, really strange compared to other strange years. I mean, they're always unique and kind of strange, but typically for the year, we're up pretty much all the time. Now, that means by the end of the year, there can be a lot of gyration between now and then. And then just looking at different times and different folks that were running during that time. And then here's another technical analysis chart. Tends to be a little more positive when we're going up. Here's the cup and the handle. I'm not a big, I don't look at a lot of the patterns so much. I like horizontal lines the best, followed by trend lines, and then we look for support and resistance. And we are potentially coming up to resistance. We have not surpassed the all-time high in the S&P 500. And we're also looking at volume, which has been dropping off lately. But here they have it looking a little bit more positive. And I don't know if they're basing this on the NYSE or the S&P 500. I break it out just based on the S&P. So looking at this, even though earlier we've seen some negative divergences, the fact that we're breaking out first on this chart with volume and we haven't done so on price, I would take that more as a positive divergence. Okay, then the Fed Fund futures curve coming back up a little bit, but still suggesting that we're going to bottom out at about 3% here. And the five largest companies, haven't seen one of these charts so far this week, as a share of the market cap. The big five, the Magnificent Seven, the Great Eight, the Illustrious 11, whatever you want to come up with, right now account for 28% of the market cap in the S&P. Not a real surprise there. Probably a little bit less after NVIDIA came out with their earnings report. The weekly loan fund flows, seeing lots of money really coming out now. These are leveraged loans. I follow a chart like this. There's an actual ETF that you can get into that looks at highly leveraged loans. And we're seeing a lot of money coming out right now. And so we'll keep an eye on that other chart. And if it really starts to look drastic, we will make note of that. But so far, it's been holding up. And weekly flows into crypto. Not seeing an awful lot of money going in right now, but there is more money going in than what's coming out lately, even though Bitcoin's been under some pressure the last day or two. And then here's the Magnificent Seven stocks, the portfolio weight, where the Russell 3000 has it at 25%, the large cap core mutual fund portfolio at 22%, and hedge funds, they're long 13% right here with all those stocks. Those have been the place to be. And unfortunately, when we start to see some weakness, these are the stocks that get hit early. They're great when they're going up, but they're not as fun when they're going down. And then this is Goldman Sachs saying that they're reducing this is oil, their range from 70 to 85. Well, that's not really all that close of a range here. I'm mainly watching this because of geopolitical events. I mean, if things really spark up and oil starts to go up as well in the Middle East, this is going to shoot up no matter what anybody's range is saying. And then the aggregate G6, there used to be G7, now we dropped it down to 6. And these are just the balance sheet of the central banks going back to 2008 and just putting them all together, where at the bottom, the dark blue, that's the Fed. Then the light blue is the European central banks, then the Bank of England and the Bank of Japan and RBA. What is RBA? Republic. Okay, whatever. And then the Bank of China. I believe that's BOC. All right. Didn't really spend any time on Twitter. Everyone was going to offer their either happiness or condolences for NVIDIA, and I just didn't want to go through that stuff. Okay, here's the intraday chart. We did have a lower open here, and it looked like, okay, we're just gonna be quiet. Well, at least we were kind of at the open, and we were able to stay above the daily pivot. But then we saw things break lower, going down below S1. We found some support right here at the 55.90 level, kind of chopped along there for a bit. And then instead of going back up, we actually broke lower down below S2. We ended up almost getting down to 55.60, set a level of support up here. And then instead of breaking lower, we were actually able to go back up. We tried to get up to S1. That was now acting as resistance, and we closed off of that. Okay, and then we see that the futures are down. Not too much for the S&P. When I started recording, we were down about 0.4% with the S&P future. So we'll have to see how things play out on Thursday, but at least overnight, things are not necessarily falling apart. This is a concern, though. We still have the red line above the blue line here on an intraday chart of growth versus value. We want growth to be doing better, but it did not show really any strength in Wednesday's session. In fact, we're seeing this starting to go lower here. When we were coming up out of the lows in early August, this was really helping the S&P to go higher. Now it looks like we could be starting a trend that's actually moving lower, and that could make the market more vulnerable. Here's our end of day chart where growth was down more than value for the large caps, the mid caps, and the small caps. And we're just going down here with our small cap growth to value ratio, mid cap growth to value ratio, and S&P growth to value ratio. Also going down a little bit deeper into the rainbow with our growth versus value ETF. And we're going down after we had been seeing a nice little bounce here with discretionary to staples. So these things are adding a little bit more to the vulnerability of the market right now, but we're still hanging in there with the large cap growth. We're coming down to the 50-period moving average, but so far we've not been able, or we've not gone below that. So this could be adding a level of support here. And we did decline here with actually we went up just a little bit, but we're not seeing any real conviction now when we look at the ratio between large cap growth and small cap. Excuse me, let me take that back. Large caps versus small caps. Okay, looking at our trend, this is a little bit concerning. The green line's coming down. The ADX is coming down. We're still above 20. The red line's starting to go back up. So this is not really positive right now. It's not negative, but it's not really showing any convicted positive signs at the present time, where we've actually dropped below 20 now. So we're in a trendless environment in the short term with the ADX, and the green line and the red line are actually getting kind of close. If we see some more downward movement, we could actually see the red line cross above the green line, which would turn our trend negative. And we continue to drop off with volume there. Looking at sentiment, we're really coming down now with the Ulcer Index. And if we continue to give low readings like this, I'll probably drop this from the video until it starts to spike up again. And then looking at the VIX on the line chart, we did go up here with the VIX as well as with the bar chart since we had the down day. And we also went up with the VIX of the VIX as volatility is increasing a bit here. But the momentum of the VIX continues to be down, but it's starting to turn back up and roll over a little bit here as measured by the MACD. This is the seasonal chart of the VIX, where I still think that's interesting, right? When we should have been hitting a low with the VIX is when we really spiked up. But looking at this seasonally, it's not surprising to see the VIX going up, which also could pressure stocks. We're also getting ready to go into September, which historically is not a positive month for stocks. This is also still showing with the SKU index that the market is anticipating some kind of a big move. We did drop here, but we're still in this red area, so there may be more to come. Right now, anyway, it looks like that move could be down. And we went up with this fear gauge. We also ticked back up just a little bit here with this other fear gauge. So we're seeing fear picking up slightly, but we declined with the daily chart of the equity put call ratio. We're still going up with the 5-day and just barely just kind of bottoming out here with the 10-day equity put call ratio. And we're declining here with the risk on versus risk off. With the down day, we saw this ratio going down. And we're still pretty low here with the volatility risk premium. And our advanced decline line still holding up, even though we declined with price, declined with volume. We did break out based on price. We never did break out based on volume. So that's still a negative divergence that we've been watching. But we're looking pretty good here with our new highs versus new lows. Even with the down day, we did see a spike up in the new highs. So our 5-day is still going up, even though it's rolling over. And our 10-day continues to go up. So this internal measure is still looking pretty solid. We came down, but we're still positive with the advanced decline ratio. And we're also coming off of an extreme reading with the advanced decline ratio based on price. And we're declining a little bit further here based on volume. But both are still positive since they're above zero. This is still looking pretty good too. This is the 10-day average of the highs minus the lows for the S&P, giving us a very high reading as well. And still looking good here and not necessarily extreme right now with the accumulation distribution. We're still above the moving average, so that's positive. And we had become kind of far away from the moving average. Well, this is pulling back and no longer extreme right now. And even with the down day, the Chaikin money flow is still continuing to go up. So that's an encouraging sign. But we're seeing the Chaikin oscillator resume its more downward move. And that's been a warning sign that I've been trying to focus on here lately and really bringing up. We're no longer extreme with the vortex with the red line. It's coming back up a little bit. The green line is still on top. So we're positive here, but it did decline slightly. And we rolled over a little bit with the S&P 500 advanced decline line based on price. Actually declined a little bit more based on volume. That's a little bit of a concern there. And we did roll over, but still looking okay when we compare the S&P to the NYSE advanced decline line. And we came down with the NYSE advanced decline line below the moving average, rolling over just a little bit, but still looking pretty solid with our regular NYSE advanced decline line, as well as this other NYSE advanced decline line. And then we look at the common stock on the NYSE. We declined both based on price and volume, and didn't really see volume outperforming like it did on the S&P, to the downside anyway. And we are rolling over a bit here with our advanced decline line studies, but we're still well above the moving averages with all the indexes that we follow. Short term, not really happening all that much. We've been chopping a lot sideways lately. We're still above the 50-day moving average, and volume just continues to drop off and be well below average. The condition of the 20-period moving average trend here, we are starting to drop below the lines. If we can get back above this, that will keep things positive. If we continue to see more of a decline, eventually these lines will turn and start to go down, and that would turn things more negative. But we're still above both the simple and exponential 20-period moving averages here. And we're above all the plotted moving averages on this chart. We're no longer extreme with the boom indicator. We're not as far away from the 20 period as we had been before. We declined slightly away from the 50 as well as the 200. And we're still just barely extreme positive with the 20 period exponential moving average of the S&P, coming back down and not extreme with the 50 and declining slightly with the 200. We're no longer extreme with the Stochk RSI. We are declining with the Williams percent R, but we're still extreme positive. The CCI 14 is not extreme, nor is the CCI 20. The stochastics rolling over in the short term, but still extreme. Intermediate term also rolling over in extreme. Starting to roll over with the long term, but extreme there as well. The force index did decline, but is still positive. And we're coming back down into the +1 channel with our standard deviations chart. And this is the one that I've also been really focusing on. We got up to 90% of stocks in the S&P above their 20-period moving averages. It's declining, but it's still above this 80% level. And that's usually when we consider it to be extreme. Also coming down with this other study that we looked at. Now, this critical line is 70, and that just shows good upward momentum. But as we're coming down, that could be putting some short-term pressure on the market. We were flat with those stocks above their 50-period moving average, flat with the 100, and we declined with those stocks above their 200-day moving averages. The balance of power is no longer extreme positive. It's still positive, though, but it did come down. And the condition of the 50-period moving average, we declined, but we're still above the blue line and the red line here. So the intermediate term trend is still hanging in there, and we're above both the simple and exponential moving averages. We're showing the darker blue. The light blue, that's, I guess the darker blue is more positive. I'm still trying to figure out their colors from time to time here with the go, no go. So this is still remaining positive for the time being. And we're coming off of the highest high value, but still above the midpoint. The TTM squeeze just keeps going up. Even when we have down days, it's continuing to go higher here. And to give you some more perspective, here's a longer term look at that chart, and we're getting quite an extreme positive reading still. We did decline, but we're positive with the ease of movement. We're flat with the Erin indicator, but still positive. Coming down with the S&P McClellan oscillator, but still above zero. So even though it's declining, it's still positive. So we're still going up with the summation index based on price. But we're now seeing a negative divergence here. We're starting to turn down with the summation index based on volume. So that is something to be aware of too. We're declining, but still above zero with the NYSE McClellan oscillator. So we're still going up based on price and volume there. Swenlin trading oscillator. This is another thing that's causing a little bit of a concern. We're positive, but we're declining based on price and volume. But the momentum is still positive. The PMO is going up based on price and volume, even though they're starting to roll over slightly. We're no longer extreme positive with the PMOs that are rising. We're still extreme with the buy signals, though, and we're flattening out, but positive here with the PMOs above zero. And we continue to be neutral with the Elder's Impulse system for the S&P, as we've been pretty much chopping sideways. We're still positive with the parabolic SAR chart and the slope oscillator. Now, this is positive in and of itself, but it's looking rather extreme positive here. But it hasn't really started to roll over, at least yet. We are rolling over just a little bit with the MACD, but we continue to be positive. So here you can see the slope oscillator is really getting to an extreme reading. Excuse me, we're still positive with the TSI, rolling over a bit with the MACD, the PMO and PPO rolling over slightly, but still positive. Still looking positive with the TRIX and KST, our longer term oscillators. And we're rolling over just a little bit, but still positive with the Copic curve. Coming down and no longer in the initial extreme area with the Sean trend meter, tick down just a little bit. Now, this is encouraging. We had a down day. We were down 0.6%, but the bullish percent index really didn't move all that much to the downside. So that should be taken as positive for right now. We were flat here with the NYSE bullish percent index, and we're flat, but coming off of an extreme reading with the NASDAQ 100 bullish percent index. The money flow is now generating an overbought signal. It's come back down. It's still positive, but now it's declining. And the ultimate oscillator is still above 50, but declining. And on balance volume is just chopping around sideways above the moving average. And the RSIs are still positive. Both of them, based on 14 and 9 periods, continue to be above 50. And this is the one that we're wondering, is something happening here with the mass index? It's now completed its signals, and we were going up when these signals were generated. Could that mean that we might go down from here? We don't want to use this independently. We want to use other charts to confirm what's actually happening. So yeah, right now this looks like it could be valid, but we could have a solid update on Thursday and or Friday and pretty much negate this signal. The Pring bottom fisher, though, is still generating a buy signal, although I'm not sure why. And then we're coming back down right to the top of the cloud here with the Ichimoku cloud. We're still positive with the blue line above the red line. And the green line did decline. I know it's really hard to see, but it has been going up as of late. And we're still looking good here, longer term. This is a weekly chart of the S&P. We did decline, but we're above this R2 level. And we still have not been able to get back above this 61.8 fib extension level for the S&P. That, if we did that, that's likely to mean that we're setting a new all-time high, but we haven't challenged that much this week. We're looking a little more negative here with some dark candles with the Heiken Ashi. We're still positive, but now pointing down with the Kegi chart, where the Renko chart is still positive and the 3-line break is positive. So we're seeing some mixed signals here. And we're coming down just a little bit with the 150 and 200, but still above these red lines. Again, this could still suggest longer term momentum, but when they're rolling over, that's somewhat negative. And we're still positive across the board, even with the decline that we saw with the Keller market model on all different time frames. And we're back to being negative across the board here with the commodities and the dollar. And we saw where the financials, and that's encouraging, at least from an economic standpoint, that the financials are doing well. Healthcare, which is a defensive area, was also up slightly. Utilities, another area that we've been keeping an eye on, they were unchanged, so they didn't decline. But we saw tech really getting hit the most in Wednesday's session. And then we saw healthcare doing a BPI cross above 70, and then everything else for the rest of the day was negative as we were declining. And we compare the S&P with the equal weight of the S&P, rolling over, but not really underperforming or outperforming at this time. We declined a little bit here with our ratio as the S&P did slightly underperform the equal weight S&P because the mega caps and semis were down more. And also going back up here a little bit, meaning the equal weight slightly outperformed the S&P 500. Just a different way of showing what I also showed on the previous chart. We're still looking positive with this. The New York or NYSE new highs, new lows still are above the 0 level, and that's just a daily score. And we declined with the Dow after setting a recent all-time high again here, but we're still above the 50-day moving average. We are neutral with the Elder's Impulse system for the diamonds. This is a bit of a concern too. We're dropping below the 50-period moving average, both with the NASDAQ and the NASDAQ 100. And we're actually turning negative with the Qs when looking at the Elder's Impulse system. The momentum for the NASDAQ 100 is still positive, but starting to roll over as measured by the PPO. And we dropped below the 50-period moving average with the Qs. So we're losing some support, at least in the NASDAQ 100 area. And coming down, we closed right on this 23.6% fib extension level here after dropping below it briefly. The small caps ended up being down 0.25%, not really showing any leadership or strength right now. But when we look at the Russell 2000 small caps, we're still positive, although we're declining with the RSI, still above the 50-day moving average. The momentum still continues to be positive, but we remain neutral with the small caps when looking at the Elders Impulse system. Looking at our ratio between small caps and the tech sector, small caps did better than the tech sector, so this ratio is going back up. But over the long haul, it's been really underperforming. The mid caps did decline, but they're still above this pivot point. It's still above their 50-day moving average. We're still neutral with the mid caps when looking at the Elders Impulse system. And looking at the broad market, we were down 0.62% here, but still above the 50-day moving average with the Wilshire. And also down 0.58% with our total US stock ETF, and also still above the 50-day moving average. And the staples to tech ratio, it did go up here, and that means staples outperformed tech. But overall, this has been declining. If this is really going to start to change and go up, that could put more pressure on. That means the tech sector is underperforming a defensive area, staples. Financial sector up another 0.25%, setting an all-time high and looking pretty solid there. The FANG index continues to drop a little bit more below its 50-day moving average, and we are coming back. I didn't show this chart for a while. Now we're dropping down below this shorter-term trend line. If we continue to fall, will this longer-term trend line end up providing some support? Apple was down 0.68%, but still above its 50-day moving average. Amazon is now starting to drop below its 200-day moving average. Microsoft down at its 200-day moving average. Google in between, but was also down over 1%. Meta was down 0.45%, still above its 50-day moving average. Tesla coming down to its 200-day moving average. And here's the big one, NVIDIA, which doesn't reflect the after hours, but it was down over 2%, still above its 50-day moving average. Now, with the additional declines that we're seeing overnight, this could come down and actually test, if not break below, the 50-day moving average. Netflix was down 1.71%, but still above its 50-day moving average. Oil is dropping down a little bit more here into the mid-70s right now. And a broad market measure of the 5-period moving average of the highs minus the lows, still looking solid here. So the broader market is still hanging in there for the time being. And we still see where, when we compare U.S. stocks to world stocks, a little bit of weakness here with the short-term correlation, and we're flattening out with the longer-term correlation. The dollar was up just a little bit, even though it shows it down here just a little bit. But we did see a recent death cross with the dollar, which the stock market likes a weaker dollar there. We were up slightly with the 10-year yield. We were down slightly with the 10-year based on price. And not really seeing anything of real positive movement here when we look at the growth to value ratios. Still declining with Qs to the S&P, discretionary to S&P, and large cap growth is underperforming large cap value. So the large caps, mid caps, and small caps just not showing any real strength at this time. The S&P to utilities ratio, it did decline just a little bit, but it's been a little bit choppy lately. And we're starting to go back up here with our staples to S&P ratio. We want this to go down if we're more positive on the S&P. If this continues to climb, that will end up being more negative for the S&P 500. So what's our outlook for Thursday? Please know that the markets will be closed on Monday, September 2nd for Labor Day. I hope you're planning a nice big barbecue or camping trip or time at the beach or whatever and have a really good time. And then NVIDIA, there should be a vowel in here, had a strong earnings report, but it underwhelmed on guidance. That's kind of what they're focusing on here. We'll see if there's any real carry through into Thursday's session. We're still positive on the technicals, but we're overbought. We continue to be below average with volume. We're still looking at that short-term extreme, and I'm really focusing on that 20-period moving average study. And we just have to ask ourselves, are we starting to see some weakness coming into the market? We're just going to get the weekly jobless claims, and then this whole list here, the advanced wholesale retail inventories, as well as international trade, and then the second GDP estimate, as well as pending home sales. And so this is kind of the biggest day of the week as far as the number of economic reports that are coming out. But the big inflation report is going to be on Friday. And then we just want to keep an eye on all the geopolitical things in case they impact the markets. So here's the list for Thursday in PCE and core PCE. That's going to be the big one. Consumer sentiment also can have some influence on the market in Friday's session. And here is the economic calendar. Seasonally, we're kind of across the board here. When you look at the Dow, it's quite negative. When you look at the S&P, we're neutral to negative. But when you look at the NASDAQ, we tend to be positive on August 29th. So it's like, okay, let's see what happens. Thursday tends to be one of the better days when we compare it to 2023. It's also been the best performing day so far in 2024. So we've got that going for us. And we do see some negative seasonality coming in now as we close out the month of August. This is also showing, well, at least during an election year, we see a little bit of a bump up near the end, but not anything too substantial. And then we look at all the election years and compare it with what usually happens with what's probably happening now because it's an open field. And we're starting to close out August, which has been a fairly good month. This is likely to come down if we have more of a weaker close. It's September that we really have to keep open to seeing more, at least historical weakness seasonally. This is also showing that September can be weak. And we look at the range from August to October tends to be weak overall, going back to 1928. And August tends to perform well during an election year, but September does not. And then trying to compare 2023 with 2024 as we're finishing out August. Now we started to bump up a little bit, but then we saw that decline going into the latter part of October that we've still been kind of bouncing up off of. So what are our warning signs? Keeping an eye on these defensive sectors for right now. And we're still going up at the 5 and 10 day. We're kind of flattening out with the 10 day, but we're continuing to go up with the 5 day. And we're just not seeing anything really helpful right now with growth to value or discretionary to staples. We still have a pretty long list of positive indicators, but things that are looking a little bit vulnerable right now. But when we look at our smart money indicators, accumulation distribution, still looking positive. The Chaikin money flow is actually going up. It's the Chaikin oscillator that continues to decline, and that's giving us a little bit of concern there. Advanced decline lines, even though we were down, we're still above all the moving averages there. We're a little bit concerned here with the S&P summation index because volume is now starting to decline. But other than that, we're looking positive with the S&P and NYSE. And the Swenlin trading oscillator, still positive, but it is declining. Another warning sign. The parabolic SAR, both on the daily and weekly charts, are still positive. Our oscillators show momentum is positive. We're still looking positive with the bullish percent indexes, and that's rather encouraging for the S&P to be down 0.6% and really have that barely move. That's encouraging. The ease of movement is positive. The money flow, the ultimate oscillator, the Copic curve, the vortex is still positive. We're no longer extreme with the red line on the vortex. So we've gone back to looking more just flat out positive there. The financial sector, and that's really holding up quite well right now. And even though we're seeing a little bit of weakness, the momentum for the NASDAQ 100 is still positive. So our conclusion, we're still positive. We're still dealing with an overbought condition on below average volume. And we just have to ask this question. Are we starting to see some weakness coming into the picture? Yes, we are. But is it going to build from here or is it going to go away quickly? We'll see if Thursday lends itself to making that any clearer. In the short term, we're positive but overbought, and I'm still focusing on that 20-period moving average study. Intermediate term, our list is shorter, but we're still dealing with some overbought conditions, even though we remain positive. And in the long term, we're still positive, but we have the 150 and 200 moving averages still looking rather extreme. Thank you. I hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.